It continues to be slow going in the Hartford apart market, which continues to see slipping occupancy rates and flat rent growth. Welcome to Apart Market Dynamics from MPF Research. I'm Jay Parsons with your Hartford update. Job growth remains very limited in the Hartford area, and that is contributing to some pretty underwhelming apartment fundamentals of late. You can see from this chart here that job growth numbers have been a bit volatile, but aside from a couple of blips, job growth has been generally weak of late, and it's been trending in the wrong direction over the past few quarters. Only 3,000 jobs added in the past year, which amounts to a growth rate of just 0.6%. So with limited household formation and rebounding demand for single-family, apartments have seen sliding occupancy rates. You can see that the overall rate is still solid at 95.9%, but that's well below what was seen previously, 160 basis points below the recent peak seen a couple of years ago. Additionally, Hartford has posted year-over-year occupancy declines in each of the past 6 quarters. And here you can see how Hartford stacks up to other large markets in the northeast region of the country. It's near the bottom of the list with 2 Pennsylvania markets, Pittsburgh and Philadelphia, but not too far behind most other markets aside from New York, which sits on top at 97.4. Now, given that occupancy is moving in the wrong direction, it isn't surprising to see rent growth has been flat. In fact, in terms of year-over-year rent change, Hartford has posted goose eggs in each of the past 2 quarters. So you can see that after Hartford posted pretty strong rent growth through most of 2011 and 2012, it hasn't done much at all since then. And that follows a pattern that we've seen across the Northeast region, where it seems affordability challenges and lukewarm job growth have really slowed down rent growth. Among the major markets in the Northeast, only 2 topped 1.5% for year-over-year change through Q1. That was New York at 3.6 and Boston at 3 even. So weak numbers everywhere else, with Hartford at the bottom of the list. So does it get any better from here? We think so, but only modestly. Affordability and slow job growth remain the big challenges, and those will continue to be challenges going forward. But as the housing demand pie normalizes a bit between single family and multifamily, and that relationship has been very volatile in recent years, as that normalizes, we should see occupancy creep up a little bit and rent growth come up a little bit, maybe around 2% annually. But again, very modest improvement relative to what we're seeing now. And that wraps us up for Hartford. So until next time, for Apart Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.